Hello, everybody. Welcome to my new trade recap of last week. So I had a 0.5% net of gain week last week. The market was not that much given to us. A lot of pairs that needed to have some development. So the first trade was AUDNZD. AUDNZD. So if I go to the weekly, we had here previous week a weekly bullish candle close. If I zoom in a little bit more, you can see this was a weekly bullish candle close. So I could look on the daily. I have here my horizontal blue line from the weekly because there is a kind of supply and demand. So if I look back in history, and as you see, we had here some kind of support here like this, support, resistance. Then if I look further back, we had here also some support, resistance, wicks, resistance, then here resistance, support, support, and again resistance. So it's a supply and demand zone, and that's why I drew this zone there. So if I look now again closer, and I will go to the daily because the weekly has given me that weekly bullish candle close. So I go to the daily, and the daily was giving me here that potential. So we had here that break. So we had here a low, then we had a break of this high here. So we are bullish. So I could look for that inverted and shoulders first. So that we had our shoulder one, had possible shoulder two, but we went till the daily lows and we closed below that. So this could be an inverted and shoulders fake out. So I drew my daily zone at the lows. I took my Fibonacci from the low here till the high, black horizontal line at the lowest wick from the head. Then I went till the 4-hour. And what I saw on the 4-hour is we had here a first candle on our daily zone, and the second one was a blue candle. The third one was closing here. And then I could set my limit. The round number to the upside was that. So the round number is, the entry is on that point, so it's perfect. And the stop loss around 25 pips, but we went and touched our stop loss and we went much more further because we could complete this minus 60, 80 fib completion from the weekly that is sitting here. So that's why. So yeah, trade followed by the plan. Then the next trade is GBPAUD. So this trade, if I go on the weekly, we had here a pattern. So we had our shoulder one here, then the head, shoulder two potentially, but we went till the weekly highs. So this could be still playing out at the weekly highs, and we received there a weekly bearish candle close. So this is a nice indication that the bears could kick in again, but we didn't do that impulsively. I took here some profits out. Because I was running my FTMO for around almost 5%, so I needed to have some trade to take some partials out, and that's why I took there a lot of partials out that trade. So what I saw was we had here that low and this high, so everything between that is just a correction for possible more upside momentum. So this was against us, but we had that weekly bearish candle close. We were sitting at the weekly highs. We had here a smaller bearish W. I could take my Fibonacci from here, the high till the low here, because this is the, you can see it as one leg. So that's why I took it as one leg. And then we went to the daily highs here. We didn't had a pattern here on that bearish W. So then we went to the daily highs, and then I could look for a pattern. And on the 4-hour, what I saw was here that bearish W. So we had a first entry on the deceleration. So we had our first candle, second candle, third candle, and the fourth candle. I just wasn't tapped in. I took the round number to the downside. That was around, if I go like this, I take the magnet on these highs, and then I took the 1.82170. So then it was just tapped, but with the spreads, I wasn't tapped in, so that's why. And then I was looking for that bearish W. So we had our first leg, second leg, third leg, fourth leg, and then I took it on the beginning of correction, so around here. And then we went till the downside for around 1.2%. I took this trade with 2% risk. because I needed to have some 1.56% needed after that loss of the FTMO. So it was all or nothing, a little bit for me to have that 5% profit for that extension, because on the 20 December, it was the last date for me, and then I will get a repeated. So that's why I took it with 2%, and then I went till 5%, and then I closed it around this region here. So that's why. So I will have my extension for 14 days, so that's good. Then the missed trades. The first one was AUDCHF. This was because this was a low potential trade, because I went to the weekly, and what I saw on the weekly, we had here our inversion and shoulders in play, and we had also that natural M, so same highs, we expect same lows, we did that, so I could expect more upside momentum from that weekly zone, the natural M lows. And we had that weekly bearish candle close, so this was against me, that pattern, so that's why I didn't took it. I didn't want to have a lot of risks. And then what I had here was that shoulder one, this head, and then the shoulder two, because we had here our high, and then we broke this low here. We broke it, and that's why we went to make the head and shoulders, and eventually we went to the downside, but this could be a break-even trade for me on the daily zone. We had our descending trend line here. Then on the 4-hour, what you can see, we had the decel. The first candle touched the daily zone of interest. Then the second candle, third candle is a red one. So I could take my limit, and then we could go on break even, and this was a break even trade. And for me, if I took this trade, of course, if I took this trade, it was a break even. Then the second one, USD CAD. So USD CAD, you could take here two trades. You could take here the M pattern, so like this, the M, and then you just couldn't take here the minus 60, 80 to take partial. So if I go to the weekly, what we saw on the weekly was, okay, we had here a potential shoulder one, head shoulder two that could play against us, but yeah, we didn't touch that. So I was looking still for a bullish momentum, because we had here also that smaller bullish M that already played out. If I take my Fibonacci here from the low here to the high, we just didn't had a minus 27 Fib completion, I guess. So we could look for more upside momentum. So we had that weekly bullish candle close. We could look on the daily. And on the daily, what we saw, we had that major bullish M. We had here that first leg, second leg, third leg. Then this is a whole fourth leg. And then we went to the upside. So the fifth leg, is active right now. So what I also saw was we had here same highs, same lows, potential natural M, but the bigger pattern is still in play after that 61.80 touch of the daily. So we touched our 61.80 of the daily. I saw we closed below, but we had here also a supply and demand zone against us. So I didn't want to take the risk to take here a trade after my FTMO was around 4%. So I didn't want to take a lot of risks. And then, yeah, you could take here that bullish M, that smaller bullish M here, that first leg, second leg, third leg, then the fourth leg to the downside. You could take it here on the first leg here, on that first, second, yeah, from the low here, you could take here your limit, and then you could go with the stop loss around, around 30 pips. You could take here almost 2.3 at the 60 minus 60, 80. If you took just a round number to the downside, yeah, 130, I just didn't got tapped. If I go to the minus 27, it was around 1.7. You could also take here partials. It's how you normally take it and what percentage you would take. So that's depending on yourself. So then you could head here, take partials here, and then what we made after that was, so we had here a high, here the high, and we broke it here, and so we had a low, and then my entry was active. We went on break even or something, if you took it. And then what I saw was here a potential inverted and shoulders, because we had a break here of that high. So we had here that shoulder one, head, shoulder two, and then you could take a trade to the upside. So that was also a break even if you took it like this, because if I go like this, I will take it on a shoulder 1 like this, then take profit on the minus 60.80, minus 27 around here. Yeah, minus 60.80 was around here, something round number 70. Then stop loss wide enough, 30 pips. If I look on the 1 hour, you can see we went to the minus 27 then. So we went to the minus 27 here, and then, yeah, we went straight back. So this could be a few partials taking at that point. So yeah, that's why I didn't take it. The daily zone was against us, and we were clearly rejecting from that selling zone here. And here also some support, so that's why I didn't take it. So the last one was NZD CAD that I missed. This was a trade I could take, but I saw it as a natural M and it as not as an M pattern. So what we had was here our first leg, second leg, the third leg. You can see whole that leg here as one leg from the low here to the high. You can see that. But I saw that as an natural M and we broke it. So what I saw was here that same highs, so we expect same lows. We broke it here. So I wanted to not take some risk at that point, to take there the bigger M. And that's why I didn't took it. So if I go on the 4 hour, my daily zone was at the daily lows of that institutional candle. If I go on the 4 hour, you can see we had our first candle here. Then we had our second in the diesel box. So we can count this first one, second. We had a blue candle, the third, and then I could take here the fourth with a just a market order, market execution, and then we went till the 4 hour lower high here. And then you could take some partials for around 0.85%. And yeah, this was maybe a trade I could take. But yeah, I didn't do that. So this was my trade recap of last week with a 0.5% netto gain. So hopefully next week will be better for that other 5% to close the FTMO for 10%. So yeah, see you next week. Bye.